Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra and with me is Mangala Malu, and these are the top headlines on Midcap Radar. Midcaps turned negative for 2022 amid a broad-based sell-off as global pressures and renewed concerns over COVID spread take center stage. The Nifty Midcap Index slumps over 2.5%, while Nifty and Sensex shed over 1% each.
Landmark Cars and Abans Holding take a drubbing on listing as investors' sentiment turns and valuations don't offer enough comfort. Auto dealer Landmark Cars management tells CNBC-TV18 they remain focused on the premium and luxury segment, and they expect to take market share from their BYD's EV business to 15 to 20%.
Ingersoll Rand India surges in a weak market after announcing that it will invest 170 crore rupees to set up a new manufacturing plant in Gujarat.
Brokerage is bullish on SBI Card after it continues to gain market share with record addition in credit cards. Morgan Stanley has an overweight rating on the stock.
City Union Bank extends losses after RBI flags divergence of nearly 260 crore rupee NPAs. The management tells CNBC-TV18 stressed assets to the tune of 65 crore rupees are likely to be recognized, even as it says the lender is seeing significant recoveries from old NPAs. Okay, those are the top headlines that we are tracking. The pressure on the market continues. We did see some recovery from the lows, but still it's a 220-point cut on the Nifty, and mid-caps, they're bleeding in house. So that particular index is down 840 points. At a point in time, the index was down almost 3%. So yes, there has been some recovery from those levels, but still, it's a dark shade of red across the Indian screen. Couple of stocks in the broader markets which have fallen sharply. So we have something like a BLS International, Huhtamaki India. That stock was up 10% yesterday. You have the fertilizer stocks that have been the stars in the last couple of trading sessions, but today these all stocks are down. Nifty right now at 17,900, but the undertone definitely is bearish, and the global cues, they are weighing on our markets.
They are, and the portfolios are going to be bleeding today because you have nearly 12 stocks declining for just about one advancing. And just take a look at a bunch of stocks which are declining. The texture of the stocks which are declining are the ones which had seen a big gain in this year itself. Union Bank down around 6.5% odd. Canfin Homes down around 6%, and in the broader markets, the non-F&O markets as well. GE Shipping, a mover in this year, almost 120% higher this year, has corrected about 10% odd. Arvind Fashions is the other one, which is down 9%. Garden Reach Shipbuilders, again another defense stock, which is up 82% this year, has seen a bit of sell-off. In fact, more than a bit of sell-off, 9% lower on that one. And Kalyan Jewelers is the other one, also declining on huge volumes, down almost 10% on that counter after having rallied around 62% this year itself. So portfolio is definitely bleeding a lot more than what the frontline index has, you believe, which in itself has seen a big cut. In fact, as we speak, the Nifty is down almost 1,000 points from the record high that it hit earlier in this month. 18,877 was the record high, and then we have the Nifty just above that 17,900 mark. Hemen Kapadia of KR Choksi joins in now. Hemen, things have turned for the worse suddenly in this week itself, and from last week to now, it looks like an absolutely different market.
Very good afternoon, Mangalam. Thank you for having me. But frankly speaking, this was in the asking. We ignored too many technical negatives signals. I mean the market. The Bank Nifty went up to all-time high, so most of us were stupefied that, the Nifty will follow suit. But no, that was a red herring. Bank Nifty came down, Nifty came down, and we were overbought, negative divergence. There were n number of things why we should have corrected earlier, and 18,800 wouldn't have sustained. So frankly speaking, yes, that's happened. Now, I think that, like you said, the sea change from last week and this week, and now suddenly everybody's ultra bearish. We are coming to supports. I think downside should now get limited. I think Reliance and Infosys, two stocks which could turn the market, and they probably will in the next 2 or 3 trading sessions. So I wouldn't be ultra bearish right now. And yes, nothing looks good. Everything is pretty bad. But yeah, I believe by Tuesday, we should be posting a small bottom. Mangalam.
Okay, so you're not ultra bearish. That's a different view that we are getting, and that's what makes the market right. Hemen, in that case, are you looking at creating any long positions, or your recommendations are on the short side?
Well, frankly speaking, I'll just hedge my position. There is one sell. It's looking weak, but honestly speaking, after a 1,000-point fall, selling something now, I don't think that's the right strategy. But Yeah, I picked an outperformer. Firstly, there's a sell call on Britannia at 43.40, stop loss 4400, target 42.20. Crossover sells, negative divergence, mechanical indicators showing weakness. So this is a sell call. A second buy call is a counter trade, and I still feel that a lot of, IT is one sector which should turn, but this buy call on is not on IT. It's a buy call on Jubilant Foodworks. Deeply oversold indicators seem to have bottomed out. Yes, the stock has shown weakness, but I believe it's a slightly high risk contra play. So one can buy Jubilant at 515, stop loss 495, target 555.
Okay, Himain, thank you so much for joining us, taking us through those picks, and have a great weekend ahead. Well, that's a technical check on the markets. Now we'll slip into a short break. We'll connect with GS Chahal, who's the CFO at Make Money Organics. They have forayed into nano urea manufacturing. We'll get more details on the other side. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Let's go straight to Make Money Organics. As promised, the company's subsidiary has forayed into nano urea manufacturing through a tie-up with a domestic fertilizer manufacturer. Make Money Organics will invest 150 crore rupees for setting up a nano urea liquid fertilizer plant in Gujarat. To discuss this along with capex plans and the outlook for the second half of the year, GS Chahal, the CFO of the company, is joining us now. Mr. Chahal, good afternoon. Thank you so much for joining us, and season's greetings to you and everyone at the company. Well, it's an interesting foray that you've made, because recently we spoke to Fertilizer Secretary and he did speak about the potential or the opportunity that India is seeing as far as nano urea is concerned. So couple of things. You're investing 150 crore rupees. This is via a licensing agreement. What is the contract like between these two companies, your company and the fertilizer company? If you can give us details as to which company this is, and will you be sharing or any revenue here, or will you be paying any commission because you are using their technology?
Yeah, good afternoon, Sonal, and thanks for the invitation. And we are very happy to announce today that we have entered into a licensing agreement with the leading manufacturer of the fertilizer in India. And this is a patented technology which we will be supported by, and we are putting up this plant. As you know, in India, you are fully aware that we are net importer as far as fertilizers are concerned. So this is a vast opportunity which is there, and we will be starting this plant in the 12 months period. As far as arrangement is concerned, so we will be provided all the basic engineering and process technology for manufacturing of this plant. We have created a wholly owned subsidiary, Make Money Crop Nutrition Limited, under which we will be manufacturing this plant, and this is in Sanand, in Gujarat. And this is the new subsidiary, so it will get income tax advantage also for the lower rate, and because we will be completing this project within 12 months period and before 31st March 24, so we'll be getting that advantage also.
You're doing this through a licensing agreement with a domestic fertilizer manufacturer, right?
Yes.
So
this licensing agreement is for providing of the technology.
Okay.
So investment will be made by the Make Money Crop Nutrition Limited. A plant will be of Make Money Crop Nutrition, and we will be paying the royalty, and we will be selling under our own brand.
So can you give us a sense of how much is the commission / royalty that you will be paying to the company to use this technology? How many years can you use this technology for? And do you have to also share some revenues, etc., with them?
No, there is no revenue sharing. It is purely technology where per unit we will be paying to them as a royalty component. And this arrangement is for the period of 20 years.
Okay, 20 years. So royalty, the amount? I'm sorry, I missed that.
Yeah, royalty will be per unit basis.
Per unit. How much is that?
So this is part and parcel we have included in our revenue model. So where we are saying it should be contributing roughly, today if you see, the price of per bottle MRP is 240 rupees. So, and we have 5 crore bottles manufacturing capacity. So we are estimating around 1,000 crore will be the top line. and that we have considered in our model. So what is the royalty payable?
So what is the royalty payment? You said 240 rupees is what you will sell it at. 1,000 crore is the revenue potential of this.
Yes,
How
yes.
much will you have to pay to the domestic company for usage of this technology?
No, that is something we have already entered into an NDA. So
Okay.
Okay.
exact amount we will not be able to.
Okay. Since it's an NDA, we understand that.
Yes.
But that's about this new foray that you've gotten into. You've made a couple of announcements actually. On 14 November, you spoke about an agreement with a global agrochemical company for supply of agrochemical products for 5 years. What is the revenue potential here, and will you be making any more investments? Will it open up export opportunities for you?
You are talking about agrochemical multipurpose plant.
No, I'm talking about this recent global agrochemical company. You had entered into an agreement with them for 5 years. This is a release dated 14th of November. An agreement worth $100 million. I wanted more details on that. Is it a different product that is that the agreement is for? And from when will this revenue start flowing in your books?
The audio was not clear, so I'm not able to hear.
Let me try this then. You on 14th of November, you entered into an agreement with a global agrochemical company. This is for supply of products for 5 years worth around $100 million. Just wanted to understand when this starts, what products are these, and this revenue of 100 million over 5 years, is it going to be spread evenly or front-ended or back-ended?
Okay, that is the long-term supply contract with one of the multinationals we have entered into, and that is supply will start from the January onwards.
Oh.
And it will be spread across actually and equally in the 5 years.
Okay, all right. And you also spoke about the multi-purpose plant that has started operations in November itself. What is the initial capacity utilization that you're seeing here? Any further capex that you'll be putting in?
Yeah, so that plant we have already commissioned in this quarter, and now capacity is being ramped up. We are expecting anywhere 50 to 70 crore of top line in this year by March, and significant contribution will come from the next year onwards, where we are expecting around 50 to 60% capacity utilization, and it should add anywhere between 300 to 350 crore from that plant.
So with all these things that you're doing and the titanium dioxide plant, wanted to know whether that's been commissioned or not. Nanotechnology will give you 1,000 crores of revenue. This business that you've entered with the global agrochemical company will give you almost 8,000 crores worth revenue, or rather 800 crores worth revenue over next 5 years. Then you have your multi-product plant and then the titanium dioxide plant. I'm looking at make money, say 5 years from now. What do you think the revenue profile of the company could be?
Actually, because once we have already given guidance up to 2025, so where the new project was not considered, which we have in nano urea, while we considered for our titanium dioxide and the revenue coming from the multipurpose plant. So where we expect by 25, it should be 4,500 crore, which was the earlier announcement, because this plant will also get commissioned, this nano urea, by March 24. So this will add in the earlier guidance, which was for 25. So this new contribution will be coming from this nano urea will be added to that. So first year we can expect anywhere between 50 to 60% capacity. So that will be add on to the earlier guidance.
So that 4,500 crore becomes 5,000 crores.
Yes.
Okay, take that point, Mr. Chahal. Thank you so much for joining us. That's the word coming in from Make Money Organics. So new foray and strong guidance and a guidance upgrade as well. Let's slip into a short break. We'll get you more on markets and stock-specific action. Stay tuned.
Welcome back. Just keep an eye out on Tarson's products. That stock from the broader markets has suddenly picked up and has moved to the high point of trade. This at a time even when the Midcap index is down almost 3%. In fact, almost a 1,000-point decline is what we're seeing on the Midcap index, and the frontline indices are virtually at the low point of trade. But let's talk about the Midcap spotlight. When we're talking about Midcaps itself, Surabhi is focusing on Abans Holdings, which made a tepid D-Street debut today. Surabhi.
Hi, thanks for that. So Avance Holding made its debut on stock exchanges today. It has seen a steep fall after kind of a flat opening. It was listed at a premium of 1.1% at 273 rupees per share versus an issue price of 270 rupees. Now what the company does, it is a diversified global financial service business. It provides NBFC services. It also does global institutional trading in equities, commodities and foreign exchange. It provides private client stockbroking and also investment advisory and wealth management services. There were some concerns regarding this business even before the issue had opened, that their revenues have been declined for the past 3 consecutive years. They have reported negative cash flows in the past and they may continue to do so in the future. That's what it said in their DRHP. In 2019 and 21, they've spent 34 crores and 29 crores on electoral bonds, whereas their net profit for those years has been 45 crores and 36 crores. Their subsidiary has also been involved in a SEBI proceeding as a trading member, and there could be a failure to obtain, retain and renew certain licenses on a timely manner. Apart from this, it is also trading at an expensive valuation. It is trading at 27 times FY22 PE, whereas Edelweiss Financial, their competitor, is trading at 29 times FY22 PE.
Okay, explains why the stock saw a tepid debut today along with the market conditions that we are seeing today. The other stock on our radar is Ingersoll Rand. It is in focus, an outlier amid a broad-based sell-off that we are seeing. The stock is up 7% in trade today. The company will be setting up a new manufacturing plant in Gujarat. Vaishta is joining us to tell us more. Vaishta.
Hi, Sonal. Thanks for that. Well, Ingersoll Rand has been in focus, and like you mentioned, they are setting up a new manufacturing plant in Gujarat, and this is to manufacture new range of air compressors, air treatment devices, hydrogen compressors, and many more products. And this is to cater to the domestic as well as to the export markets, which includes the likes of Europe, of Middle East, and the African regions. Their existing capacity is at 10,000 units per month, and the current capacity utilization is already at 100%. So the proposed capacity addition will initially be at 5,000 units per month, and by September 2024 the proposed capacity is expected to be added. So the investment required is 170 crores, which is to be funded via the internal accruals route. Back to you.
Okay, thanks a lot, Vanshita, for that. The other stock on our radar, losing among all the others which are declining, is Godrej Properties. The company will develop a premium residential housing project in Gurugram. Sonal, tell us more about that.
Well, yes, the stock is declining, but the news is positive. So, as you said, the company has entered into a new residential group housing project in Gurugram. They'll be developing it, and it will comprise predominantly of premium apartments, is what the company says. It'll be developed on a land measuring for 14.27 acres. We still don't know the developed million square feet or the exposure there. The estimated revenue potential here will be around 3,000 crore rupees. And company says it will be one of the largest residential developments in Gurugram for them. And the CEO designate, that is Mr. Gaurav Pandey, he says that this will enable the company to increase their market share rise in Gurugram. Now remember, he will be taking over the company from 1st of January after Mohit Malhotra resigns, and this is something that we knew for quite some time now, and his strategy going forward is something we'll be watching out for. The stock is lower. Of course, the market move is like that, but this is a positive news for the company.
This is positive news, Sonal. Thanks a lot for that. But meanwhile, the decline continues to extend on the frontline indices as well as the broader markets. Delta Corp is down 6.5%. Usually December time you would see the stock move higher because people believe that maybe the last week of the year there would be a lot more business out there. That stock currently at the low point of trade. We're seeing big declines in a lot of these fertilizer stocks as well, which have seen big moves in just the last week itself. So Chambal Fertilizer, for instance, is at the low point. But the frontline index has been weighed lower mostly by Reliance. The intraday chart of Reliance should come up for you. In fact, currently at the low point of trade, off its 52-week high by about 12%. And this month itself, that index is down 8%. So that's the one which is taking the frontline index lower. With that, we wrap up on this edition of Midcap Radar. But as we do that, let's leave you with some talk coming in from Punita Kumar Sinha.
I expect the markets will really bottom by the first, 4 or 5 months of the year in the calendar year 2023, because I think by then the Fed will be done. Earnings should bottom out. I don't really expect much of a very deep recession. I think the recession is likely to be shallow. I'm frankly not seeing any real signs of a recession in the US. I'm not too concerned about the financials right now. because I still see some value there as compared to some of the other sectors of the economy. But there are other sectors of the economy as well that I think are a good place to be in environments like these where there is inflation. So, for instance, infrastructure is a place that I think could keep benefiting. The real estate sector, financials obviously benefit as credit growth in India is strong. So I think right now we still should be focused on maintaining a good exposure to value stocks.